Welcome to the Gamma Brief. It is Thursday, July 30th, 6:45 a.m. Eastern. For anyone new here, the Gamma Brief is an experiment. The brief is built using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. This brief is built using a single dataset, the SPX 0DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX flip point are calculated from that chain only. As a friendly reminder, Gamma Brief is market intelligence, not financial advice. And if you like what you hear, smash that like button and sub. Every subscriber to the channel helps. All right, let's get this started. ES futures are trading at 7,380. Yesterday, we issued a caution signal for high volatility based on the negative gamma setup, and the session, driven by a hawkish rates backdrop, expanded exactly as projected down to 7,316. If the overnight gap holds, the upper expected move becomes the immediate target. If it fades, dealer selling accelerates toward the floor. We remain in a negative gamma environment for the sixth consecutive session, with net GEX sitting at negative $3.8 billion. VIX remains elevated at 19.53. In this posture, dealers are net short options, meaning they hedge by buying into rallies and selling into declines, structurally amplifying intraday momentum. There is no flip level within the observable chain. Dealer positioning is uniformly negative across the board. However, the overnight regime is vulnerable. 11 high-impact releases before the open could force massive dealer re-hedging and rewrite the regime before the opening bell. The structural framework is anchored by the put wall at 7,300 and the call wall at 7,450. The expected move band spans 90 points from the cash close, projecting a lower bound of 7,226 and an upper bound of 7,406. ES sits 81 above the put wall, 69 from the call wall. Gap fade reprices floor to 16. Overnight, markets continued to digest a hawkish Fed narrative compounded by energy supply risks, pushing the 10-year yield up 6 basis points. ES futures are attempting a bounce, up 0.4%, while VIX has pulled back 5.4%. Sector rotation is defensive, with consumer defensive adding 0.5%, while industrials lag by 2.6%. GDP Sales QoQ quarter-over-quarter drops at 8:30 alongside PCE. Tell me in the comments, does this print break the range or does gamma absorb it? The threat matrix today is entirely concentrated at 8:30 a.m. Eastern, featuring GDP sales, quarter-over-quarter, Core PCE, and personal income. With a 5 out of 5 calendar risk score, the data dump dictates the day. A hotter than expected inflation read forces dealers to sell into weakness, accelerating a move toward the 7,226 lower bound. A soft print that relieves rate pressure could ignite a rapid short covering rally toward 7,406. The environment is consistent with defined risk directional setups that align with the post-catalyst momentum. A confirmed break below 7,300 invalidates any bullish gap thesis and shifts focus to downside expansion. We are operating in a fully negative gamma regime pending a dense data cluster. Wait for the 8:30 reaction to settle before committing capital to either direction. The data drops before the open. Let the market show its hand first. Level set, bias defined. Good luck out there. Standard disclaimer remains. Gamma Brief and GEX log are market intelligence, not financial advice. Options are high risk. Manage your size and trade your own plan.